The path that leads to truth is littered with the bodies of the ignorant. Miyamoto Musashi. My friends, don't be ignorant. Learn what it is we have to teach you here. Practice trade until you get this down. Fill out your daily market worksheet 4 days a week. Your weekly market worksheet today. That's what you do on Fridays over the weekend. And of course, your trade worksheets every time you do a practice trade. Chapter 8 of the book. I've just finished doing that recording. It is all about, I released it a couple of days ago. It is all about candlesticks, particularly Heiken Ashi candlesticks. It is a great chapter in the book. Thank you for everyone who's purchased the book. If you don't have a copy, we have an autographed one waiting for you. Follow the link in the show notes. Patreon members, hope that you did one or more of the practice trades on the 20 weekly vertical crossovers we sent you on the S&P 500. Everything is up on Friday. The S&P 1.51%, the Nasdaq 100 2.21%, 20-year bonds 0.95%, gold 0.91%, and Bitcoin, not much for Bitcoin, but it is up 0.84%. Now let's jump into these charts starting with the S&P. My friends, look, it looked like it was going to be a weekly vertical crossover, but we never call it until and unless it occurs, and it did not. It pulled back. The crossover down pulled back because of the up day 1.51%. Price percent oscillator is still positive, and look how positive the derivative oscillator still is. Might have been a bit of a hint as to where the market was, but things stabilized. Let me move the two-day crossover, the two-day crossover line over, and you can see how we ended the week with almost a doji, long wick on the bottom, a wick on top about half the size or less of the wick on the bottom, so you see all the downward pressure. But again, price percent oscillator just not enough to have it cross over, so we're still in a confirmed up move. Although weak, it is still there in the market. Look at the 2-day. And let me move this 2-day line back to where it's supposed to be. That is not a recross. That is a 2-day crossover going down. That happened back on the 10th. That represented last Friday, and it represented this last Monday, the 10th. So, as we look, we had a strong down candle on the Tuesday, Wednesday, and the Thursday, Friday, a green spinning top. It's a solid green, so that means it's a slowdown in the down movement. There's still downward pressure on the 2-day. Look how flat the 2-day has gone on the price percent oscillator. Still heading down, though. Derivative oscillator gaining downward momentum. Go to the half day, we can see where things boomed up in the morning, further in the afternoon. Not enough to cross over going up, but again, moving in the right direction for maybe some continued up movement. We'll wait and see, but that's where we are. Now, of course, that 2-day, when that crossed over, that was your last chance to pull out of, take your profits on SPY. Again, you set your profit and loss bands. You make your decisions as the trade moves along. You don't hold on forever. When you take a profit, be happy with your profit. Don't kick yourself in the butt if things go higher, higher, higher. Yes, learn from that and make up rules for how you determine when to pull your trade. It may be an average of what you've seen with the last several weekly vertical crossovers. It may be the experience you have in your show notes from years past during the same quarter, during the same month, during the same time period. Remember, we have the fall-winter trading zone. We have the summertime trading zone. Sell in May and go away. Live to trade another day is an old adage in the market. Why? Because typically in the summertime, a lot of the volume went out of the market. People went on vacation. The big traders were gone, and things got a little lackadaisical. That did not happen at all last summer. We'll see what this summer has in store for us. That's where we are on the S&P. We're going to wait and see how things go over this next week. Are we going to see perhaps the 2-day recross and go up and the market boom more? Or is this just a portent of a crashing market? Don't know. We're not going to pontificate because we don't know. The charts are going to tell us. There's going to be plenty of time to trade, just like there was when the market crashed with the COVID crash. How well did we do? Swimmingly well. We saw things pull over at about the 307 mark, and how far down did they go? 228 was the low. And then, of course, they recovered. Our jumping in point for the recovery somewhere around the 286 mark, and went up how high? Well, it hit a peak there before we had that 3-week little mini crash of 358.75. Did you capture all the down move or all the up move? Of course not. Your job's not to capture every single penny. Your job is to get in and ride it to victory, however far you do ride it. Now, want to know more? Get the book. It's available. Check your link in the show notes. Also, if you're not a subscriber, subscribe. Great training for our subscribers today. That is free, of course. And that training is cutting losses is the key to winning. That may sound counterintuitive. You don't win football on defense. But if you understand how to cut your losses, my friends, you will become a winner in the marketplace. Maximize profits, cut losses. Your first loss is almost always your best. Let's move on to from the S&P to the Nasdaq 100 is represented by Q. Up for the day 2.21%. Up booming. But what do we see for the week? A strong down week. We had that weekly vertical crossover going over last week, Friday the 7th. And of course, this week, lots and lots of down movement, price percent oscillator pulling away from the red signal line, but that derivative oscillator doesn't want to go negative. Look at the 2-day. Great opportunities for jumping in and riding that baby down. And of course, we saw the 2-day just virtually crash there hard for that Tuesday, Wednesday candle. Of course, Monday was down after the weekly vertical crossover on Friday. And that was last Friday, the 7th. And what do we see going on with this latest candle for Thursday, Friday of this week? That would have been the 13th and 14th. Well, we have a green spinning top. No, a green, sort of. I hate to call it a top because there's a little bitty wick on top, a long wick on the bottom. It's solid green, so it's a slowdown in the down movement. Price percent oscillator not heading down at the angle it had been, softening a bit as far as down movement goes. Derivative oscillator gaining downward momentum, but that's where you can see for the up day. But you notice price is still well below that 2-day trend line. And why do we have the weekly still drawn going up? We need to change that. Okay, there we go. Not a great trend line, but a trend line nonetheless. So that is where we are on the 2-day and the weekly. Let's look at the half day. At the end of the day, it crossed over going up. So we shall note that. Remember, bottom up, top down when you're drawing trend lines. We have some great trainings on trend lines. I will put those out over the next week or so for subscribers. But again, we had a crossover at the end of the day, up in the morning, further up in the afternoon. Again, price right below that 2-day trend line, well below the weekly. So again, a pullback on Friday. Don't know how long or how strong that will be. Again, we look at our 2-day still heading down. We look at our weekly still heading down. So everything is still in effect. Of course, those of you who took profits when we saw that booming down move, you can pat yourself on the back. That is fine. Again, you make the rules for yourself. You take profits when you think they should be taken. Lots of good trainings on that. Let's move on to 20-year bonds. What do we see going on there? Well, 20-year bonds had a weekly vertical crossover that hasn't done too well for us at all. Still positive. The derivative oscillator, still positive. Price percent oscillator, still heading up a little bit, flattening. But what happened over the course of the week? A down candle with a long wick on the bottom, tiny little nub on top. So as far as the Heikin Ashi candlestick goes and price movement, that is down for the week after sort of a green spinning top, almost a doji the prior week. So weakness we see there, but again in bonds, The price percent oscillator still going up. Look at the 2-day, even with that strong down movement on the Tuesday, Wednesday 2-day candle, slow down in that down movement on Thursday, Friday. You see it didn't go lower and ended about where that prior candle ended. Not enough to cross over going down on the price percent oscillator. Derivative oscillator did. But again, what's going to happen with bonds over the course of this next week? We're going to see a bounce off. We're going to see a crossover. Don't know, but some real inherent weakness there. Perhaps you'll see a bounce off and bonds head back up. That's probably going to be decided by what happens with stocks. If stocks take off again or if continue moving down, a lot of times what happens? You see money leave stocks and go into bonds. So we'll wait, we'll see, we'll watch. It's a little sketchy there. Look at the half day we see up in the morning, further up in the afternoon on Friday, but the derivative oscillator and the price percent oscillator still both negative. That's where we are on bonds. Let's leave bonds and go to gold. Some good news there. The precious metal crossed over going up back at about the 166.60 mark. And of course reached a high through the course of the week around the 172.84. That's after 3 weeks. And again, the high previously 172.55. So it did go a little higher this week by 30 cents or so. So that's nice to see. And again, price percent oscillator gaining momentum, derivative oscillator heading up, price well above the weekly and the 2-day trend lines. Gold up for the day, like I said, 0.91%, looking nice. Look at that 2-day chart, moving up. It really boomed up that Monday, Friday of this last week, or the week before, and this week. But again, things continue to track up. Price percent oscillator moving up, derivative oscillator, like I said, price well above that 2-day and the weekly. And we look at the half day, and it looks like the half day is right there at crossing over, heading up. Derivative oscillator still negative on the half day. Price percent oscillator trying to cross over, going up. So looking good for gold, trying to regain its luster, particularly there on the half day chart. So we're feeling good. It's nice to see gold again after all those weeks and months of down movement to start taking off again. I guess about the time we'll know gold's topped when you start seeing all the ads on TV telling you need to buy gold. That seems to be about the time you need to sell gold. Let's lastly go to Bitcoin. Was up a little bit for the day, 0.84%, but of course a down week. Price percent oscillator spiking over, going down. Derivative oscillator gaining downward momentum. Red spinning top. 2-day chart. Again, nice size red down candle. Heading down, price percent oscillator, derivative oscillator going down. Half day, we can see where things sort of bottomed there around, bottomed on Thursday and are just sort of hanging around there still on that half day chart. So waiting for Bitcoin to get its act together. If you're interested in Bitcoin, interested in learning how to trade it and track it, then of course the first thing you have to do is practice it. My friends, that's where we are. If you want the special weekly vertical crossovers, the 20 of those we provide every week. If you would like our course, Options Made Simple, the Charting Wealth Way. 3-part series on options, all you need to know to get involved in options so you can start practice trading them effectively. That training is also available. And of course, our monthly question and answer live call-in session. All of those are available exclusively to our Patreon members at any of the 3 support levels, starting as little as $30 a month, $1 a day. If you're serious, then get serious. Show you're serious. Become a Patreon supporter. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.